Good afternoon, everybody. Uneducated economist here. I was just reading a Bloomberg article that just came out before I started the video, or at least that's where I saw it. It was just before I started this video, talking about the currency trade that has taken place this Sunday afternoon. It is showing that there is still a lot of fear in the markets and that the Federal Reserve statement on Friday was not enough to squash that fear. People are getting out of their riskier assets and moving into the safe havens. They're getting into the yen, they're getting into the Swiss franc, they're getting into the dollar. This is a fear factor play that has taken place right now. And I got to thinking, what is it that the Federal Reserve is going to do in order to help alleviate the downturn that has taken place in the markets? Now, typically, the Federal Reserve would try and drop interest rates in order to stimulate the economy with cheaper interest rates for everybody. But interest rates are very low right now, and they really don't have a whole lot of room. So if there was a real downturn in the U.S. economy, they're not going to have a whole lot of room if they start dropping them now due to this fear factor over the virus. Anyhow, a lot of people have called me a conspiracy theorist lately, especially when I did the little ranting video talking about getting yourself prepared. But here's a real conspiracy theory for you. Have you ever heard of catastrophe bonds? Okay, I've heard of catastrophe bonds, and they shortened up the name to cat bonds. This is where insurance companies sell bonds through an intermediate bank. And the idea behind selling these bonds is that if everything is cool and there's no natural disasters or anything else out there, these bonds will pay off, and they pay a pretty high percentage considering, if you were to buy like U.S. Treasuries or something. So these bonds, these catastrophe bonds, if there is a natural disaster or a catastrophe of some sort, like a pandemic, like this virus or whatever, then the bonds default on the investor. And that money goes to the insurance company to help alleviate the catastrophe that has taken place, whether it's a flood or a hurricane or whatever it is, including this pandemic. Now, my conspiracy mind starts leading into the idea of that movie, The Big Short, where those guys were trying to short the housing market by buying credit default swaps on those mortgage-backed securities. Well, is that taking place right now with those catastrophe bonds? See, that's part of the shadow banking system. I could not find any place where anybody was talking about catastrophe bonds, credit default swaps. But you could probably find a bank out there somewhere who would do that credit default swap for you. Well, they'll take a premium for an insurance policy against the default of those catastrophe bonds. So the idea is that, and I don't know how this would work, but going along with that movie, The Big Short, if you could do that, if you could get the bank to issue you a credit default swap where you would pay them a premium to say if these bonds default, you would get paid. Think about that for a second. How many of those credit default swaps could be sold? And how many people could buy those things? And then if you push out enough information, enough fear, and enough concern out there about this virus, that you get the World Health Organization to declare it a pandemic, and those bonds default, those catastrophe bonds default, the CDSs would kick in, and whoever owned those CDSs, those credit default swaps, could get paid a lot of money. Isn't that talk about conspiracy theory? That's a conspiracy theory, okay? That's the way my mind works, because that's what I fear may be happening here, is that a lot of those credit default swaps could have been sold. I couldn't find any information on it, but they could have been sold on those catastrophe bonds. And if a catastrophe takes place, the CDSs kick in, and somebody's going to get paid a lot of money. Now, let's go back to the Bloomberg article. So we're going to find the markets opening up here on the futures here before too long. And we're going to find out whether or not the Monday morning opening of the markets is going to be another downturn, or if it's going to start, heading back up again. And I have a feeling that we are going to continue to see a downturn. The Federal Reserve, their whole goal is to purchase treasuries. Now, they could print up money, and they could buy corporate bonds, and they could buy mortgage-backed securities. They can even buy, foreign treasuries or whatever, foreign debt. There's no limit to what the Federal Reserve could buy. They could print up and buy the entire world. What the dollar will purchase after that would be very skeptical on the value of the currency if they were to print up that much money and start buying that kind of stuff. So I have a feeling that the Federal Reserve is probably going to hold back just a little bit on the dropping of interest rates. Because if there was a real downturn here in the economy, if they were to drop interest rates now, what are they going to have for a tool after that? They have two tools: forward guidance and asset purchases, mainly treasuries, where they print up money and buy the U.S. treasuries. But if they drop interest rates now and start going into bond buying, what room would that leave them? Or what tools would they have when the economy really does start to turn down? All they would have is forward guidance. Now, if you listen to monetary policy, you're going to see that there's probably not a whole lot of room for them right now. And that really it's going to be more about fiscal policy, about the U.S. government stimulating the economy with a lot of government spending. And right now, you got the government in a huge deficit, meaning that they're spending far more than what they are bringing in tax revenue. This is one of the reasons why Trump is so adamant about the Federal Reserve dropping interest rates. This is why he says that we should be like Germany and Japan and have negative interest rates so we can refinance our debt with a lower interest. The only problem with doing that is that we're going deeper and deeper and deeper into deficit. See, if we refinance with the lower interest rates and then started paying our bills off, that would make sense. That would be fiscally responsible. So the monetary policy has pretty much run its course, and now we're stuck at fiscal responsibility or fiscal policy in order to stimulate the economy. And the government, the federal government, is just too deep into it, which is going to mean that it's going to take local government, your state, your municipalities. Those guys are going to have to go deep into debt in order to stimulate the economy, which means in the end, higher taxes. It will work. It will definitely do its job. But the damage that will be caused from that will be quite extreme. Now, I got to go back into work. Uneducated economist. I'll leave links down in the description for you guys for that Bloomberg article. You guys let me know.